Hi everyone, it's Evan here from the Trade Risk on Friday, October 13th, Friday the 13th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. If you're new to this channel, welcome to the video. Thanks for watching. Do subscribe if you like the format, if you like the video, to our YouTube channel. It's completely free, simply keeps you up to date with all of the latest videos that we're putting out every single week. So let's jump in here to markets with the S&P 500. You can see we're up 12 basis points here on Friday, up 30 cents in the SPY ETF, and this was a super boring week. We really traded pretty much nowhere. We had some very tight ranges intraday across the indices, and we had some very light volume that we saw out there. So if we look at the weekly chart first here in the S&P 500, you can see after all was said and done, we're up 58 cents. That's 23 basis points. And once again, you can see we're closing right above last week's highs, still pretty extended away from the 8 and 20 period, which are both rising as we close at all-time highs with a trend that is very strong here on the weekly chart. So back to the daily here, you can see we virtually went nowhere over the past 5 days, which isn't necessarily a bad thing. It is a sign of kind of consolidation through moving sideways, and we have a slight upward drift. So heading into the new week on Monday, we want to see, if we're going to just continue in this path. Do we get, it's always interesting to see how you start off the week, just to see if there's any new sort of catalysts immediately at work coming into that new week. So we want to see, can we start to lift, more definitively above some of these recent highs here. You can see we're still kind of sluggish right around this 255 level. You could argue this was the highs over the past 4 days of trading. So can we get above that? Do we kind of fall back into this old range? Do we actually test a prior day's lows or break below a prior day's lows? Those are the types of things that you're going to be looking at to see if there's any change of character. For now, volume remains pretty light. Again, if you look down here at the bottom of the chart, you can see with the S&P 500 trading every single day this week below the 50-day moving average for volume. So light volume, not much movement, sort of, gives us that impression that institutions aren't that active in this market right now. Perhaps we're waiting for all the tax bill, the tax cuts, tax reform, for that to get through. Maybe just waiting on earnings season, maybe a combination of both. October, historically, a more volatile month, certainly in the more volatile months on a seasonally trend basis, but this market hasn't really respected any of the historic trends this year. I think it's basically just kind of done its own thing, and most of that's been super light, kind of grind higher. So it's remarkable we don't have much of a more volatility right now. It's still not materializing any type of pullback. We're still holding above the moving averages. Breadth is still hanging in there and supporting this market higher. What else is there besides sticking with what you have that is working and continuing to manage risk, raise up those stops? I do say that we are, don't get conditioned into the low volatility environment, this no range intraday, because when and if it ultimately does reoccur, volatility that is, and we do get that range expansion, don't get caught off guard. Remember that markets do tend to move more than 40 cents in a day, and that will happen at some point, whether it's tomorrow, whether it's on Monday, or if it's in 2018, we don't know, but just don't get conditioned into this sleepy sort of lull of a low volatility environment. That I think is pretty important right now. So that's the S&P 500. If we go to the IWM, this is pretty healthy action here. It had this remarkable run from September and October, which we've already talked about many times now. Really at the middle of August is where it kicked off. But we can see the small caps now have spent just about 9 or so days, 2 weeks, moving sideways, slight drift lower. The 8 period is caught up, starting to flatten out now. 20 period still below price and rising, but still consolidating this move under 150. Pretty healthy action. It doesn't mean we can't roll over from here, or this could extend to a larger pullback. I still don't think that would be the end of the world at all, but at least we're getting some type of, just consolidation here, mostly through time. We're getting higher technical price levels to sort of trade against if this does start to break out again, starting to build that structure in. I think it's healthy, all things considered. Again, healthy in the sense that we do want to see it. We it's tough to continue to participate in a complete parabolic market. But again, it doesn't mean this can't roll over from here or accelerate to the downside. Just pay attention to the IWM next week. Again, same kind of things we talked about with the SPY. Pay attention to that Monday morning sort of character of the market. Watch these ranges. See if anything volume comes out, taking out a prior day's lows or high, those types of things on a very near-term sort of basis. NASDAQ 100, kind of the opposite look here as the IWM, right? The IWM's got this kind of downward drift. You got the Qs that are really sort of on an upward drift here, and they finished the week here up 46 basis points at 68 cents here in the Qs. Now, I'm a sucker for punishment because I'm back in this on the short side, but this is not necessarily a real bold call on trying to short the Qs outright, really looking for a hedge to a portfolio that now is got a little more increasingly long, picked up at least one or two new positions this week. And in order to control that exposure, still like those positions that I have on, I do want some short exposure. So I chose the Qs to put that pseudo hedge back on here on Thursday. So I do have a short position on the Qs, but again, taking in context of, the 5, I think, long positions I have on versus one short Q position, I think that speaks pretty much to where I'm at here. But the Qs continue to grind higher here. Again, trend is strong. Volume very, very low this week out of probably all the major averages. It is pretty much staged the lowest, I believe, here, and it did close the week near the highs of the session. So Qs, bulls are in control. You know that if you dial back a couple of videos or the past few videos, I do still express my concern here. Out of everything, if things can go wrong, I'm still looking at the Qs that are potentially most at risk. I think 146.50 is the big level we're paying attention to, but I'm still looking at this volume pattern. I'm still looking at some of the major components that make up the Qs, like Apple, which is far from its highs, like Facebook back to previous highs here, Google, you could go right down the list. And of course, these aren't the only names in this, but you can see they're all kind of at resistance. Google is in fact getting back to all-time highs, but some of these others are not. So the Qs still have my attention on the potential weakest link if we do see a pullback, but we'll have to see. It can be wrong. I've been wrong in the past, and I'll certainly be wrong again. So have that short position here in the Qs, but again, more of a portfolio decision than anything else. So that's the market environment overall. Again, I think it's pretty much the same MO. It's been a very quiet week. Not much has changed from a technical structure picture. It's basically just continue to level up those stops that you have in those winning positions. Look for things that aren't so overbought and can pick up a good sort of risk-adjusted entry, and I think you can continue with that same song and dance and look for taking out the prior few days high lows. If we start to see a change of character, look for volume pickup, those types of things heading into the second full week of October. So let's get into some other major markets here. TLT finishing Friday strong and getting into this gap here. If we look at the weekly chart, up almost 2% on the week, getting back above an 8 and 20 period moving average here on the weekly, which are bullishly aligned but fairly flat. Light volume as well, but very constructive developments here, putting in some structure right around this 124 level and pushing up above it. So we do have the bulls kind of stepping in at these old lows from August and July. That is constructive to see, but we could see now that if we look at this channel down here, we're just getting back above there. We get these the fast moving averages here on the daily chart trying to flip over. So not necessarily an easy long or an easy place to sort of measure risk against here on the long side, but certainly some good short-term developments there for the bulls in treasuries. If we go to GLD next, you could see pretty much continued higher as well, 2.25%, really following through nicely to last week's outside sort of reversal hammer candle, and you can see closing strong at the highs here. Volume mostly light on the week, but getting the job done. This looks like a cleaner picture here than treasuries for GLD and silver. Very much the same boat here. Nice week, 3.5% to the upside. Follow through from last week's reversal. So gold, treasuries, and silver all picking up this week and holding in some short-term bullish trends. Now, if we go to oil, this thing has been all over the place, but it had an incredible week as well, 4% to the upside, completely reversing last week's action and getting back above this 1030 level, taking out the last week's highs just barely. But bulls trying to step in here and continue, or actually reverse last week's sell-off and then continue themselves higher. We'll see if we get follow-through next week. Still pretty much a do not touch on this market right now. Just too much clutter, too much noise, too many gaps here in oil. So I am not paying attention to this much at all right now. And natural gas also finishing higher here. Nice reversal candle at a pretty critical spot. So UNG got all the way down to the low end of this range. In fact, made new closing lows here on the year for the UNG ETF. And then it reversed, pushed higher, and some volume coming in here. So I think your levels are pretty clear. You get about 620, 625, and then 640, 645 here. I think those are pretty important levels to pay attention to. And so far, a little bit of a week one reversal is at hand here in natural gas. So that, I think, is everything from market and major markets. I'm trying to look through my notes here. Do I have anything else? I don't think so. So if we get into some sectors, XLK continuing to run away with it, up 1% this week, so really kind of pushing away from all of this prior structure, floating away, no selling pressure in sight for XLK. Semiconductors, basically the same thing, 2.5% here to the upside, really extending itself from some of these shorter term moving averages on the longer term chart, and definitely the two leaders out in front this week. XLI here on Friday tried to push up through some of this recent consolidation, but kind of gapped up and failed, closed on the lows. So not the best looking candle here for industrials. Still, as context as to where this candle is taking place, it is at highs here. So keep that in mind, but maybe a little exhaustion or some reluctant to continue this trend higher in the short term, at least for industrials. XLB, kind of the opposite, but a little bit of a failure, but this holding up much better. Had the nice gap higher, and then closing on the lows, but still holding in about 0.5% here on this gap. So trying to continue the trend. We'll see how this acts coming out of the gate on Monday. IYR continuing fairly strong here, up 22 basis points on Friday, but it had a 1.64% week. If we look at that weekly chart, you can see lots of respect on this trend line, and it still seems to be respecting it. So bulls getting a nice little reversal in IYR. And then XLE, we've been talking about this one consolidating still. I, in fact, like the fact that it's consolidating. Had this great run up through September, moving sideways here for a couple of weeks, letting these moving averages catch up. So I think this will be something to pay attention to for a potential leg higher. Or do we get a rollover? Do we need to come back down and sort of retest some of these lows? That's what we'll be paying attention to heading into next week. So hopefully this recap has helped. Again, thanks so much for watching. Again, subscribe to that YouTube channel if you do like the videos that we put out here, and have a great weekend. So thanks for watching, and hope to talk to you guys again soon.